Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil rising after OPEC Plus announces a pause in output in the first quarter of 2026. That's after confirming a modest hike in December. President Donald Trump threatens military action in Nigeria over Islamist militant attacks on Christians. Nigeria's Bola Tinubu defends his government's efforts to protect religious freedom for all. And stocks and futures rally as strong tech earnings and easing U.S.-China trade tensions lift sentiment. Well, it has just gone 9 a.m. across the Emirates. I'm Johannesburg in Abu Dhabi, live from the ADIPEC conference here, where executives, policymakers, and energy leaders from across the world are gathering to discuss industry's trends and the global outlook. And we have a great lineup of newsmakers throughout the day, including the CEOs of Eni, Exxon, and ADNOC's upstream business. And that's not including the guests joining us on Horizons today. We'll be speaking about natural gas with EQT CEO Toby Rice, AI with SandboxAQ CEO Hidary, and we will have a wide-ranging chat about energy security and geopolitics with Amos Hochstein, former U.S. envoy for the Biden administration. We will play some of that interview that I just conducted with Amos a short while ago. So plenty coming up here. And of course, a lot of the conversation is about the reaction to the OPEC Plus decision over the weekend, how the signaling really for markets from here, oil markets from here. You can see a bit of an uptick in the price of oil this morning, trading just shy of $65, about 0.3% firmer. In addition to some of the bigger themes around energy, especially where AI comes in terms of energy usage and the demand for different sources of energy beyond just oil as we look ahead to the future. So that's energy. As for global markets, take a look at S&P futures. We're leaning towards the green, up 0.2%. So last week was a major week in terms of earnings. The market really took well to Apple earnings towards the end of the week, and of course the diffusion of tensions between President Xi and President Trump, even though perhaps the market was looking for a bit more detail there on the actual trade deal framework. The Hanover this morning from Asia Pacific, mostly positive, up 0.5%, as you can see from the Asia Pacific index. And then we've got the USD trading sideways, but for the most part, we have seen some support come through for the greenback in the last couple of weeks. So a case of perhaps stabilization for dollar assets after a heavy sell-off for the most part of this year. Switching over, given we're at ADIPEC today, I thought this was actually a really interesting chart. And take a look at what it's telling you. So yes, we spent a lot of time discussing how the Trump administration has been very critical towards the Biden administration's efforts to support and promote a clean transition. They've been particularly dismissive of renewables. And yet, if you look at the clean energy basket performance, especially over the course of the year as a whole, so year to date, the clean energy basket has actually beaten the S&P. And you may be thinking, why is that the case? Well, number one, there's still plenty of investment going into renewables in the U.S. and outside the U.S. So that train isn't going to stop. And second point is, and this is of course part and parcel of the discussions that we're having here at ADIPEC, that AI is going to serve as a huge guzzler of energy demand. Where is that energy going to come from? A lot of it is going to come from renewables, and that has propelled that clean energy basket higher. So interesting phenomenon that we're witnessing in terms of price action, perhaps not at all what you would have expected to see. But more short term, we're keeping an eye on Brent this morning after OPEC Plus says it will pause output hikes during the first quarter after making another increase next month. It comes amid signs of an emerging surplus in the market. Stephen Sachinski, who leads Asia's energy coverage, joins us now. Stephen, so OPEC Plus meeting, they brought back this 137,000 barrels a day to the market as expected, but perhaps the hawkish surprise is the fact that they decided to hold off in the first 3 months of next year. What is the rationale for that decision? What did they provide as rationale?
Well, I mean, I think, you look at what can be provided as rationale, but you also look at the context that it's all given in. And, OPEC Plus is always saying that they're looking at the market and they're trying to digest the demand of their customers. But I think if you take a step back from that, you can sort of read the tea leaves that this is also partly to do maybe with Russia. Russia was sanctioned, two of Russia's largest oil producers were sanctioned, Rosneft and Lukoil, by the Trump administration. And that is raising a lot of doubts about what Russia is able to produce, what they can bring to the market. And if they're unable to increase output, they have before previously pushed for smaller or no hikes at all. So likely, again, at this meeting, Russia's voice was to some degree likely heard. So that's the Russia argument, right? Because they can't drastically increase, and they're a big part of the OPEC Plus alliance. The other aspect as well is we are getting into an oversupplied market. Now, OPEC Plus has been famously increasing output since earlier this year, month after month, and that's actually been absorbed by the market relatively well. Yes, Brent is at $65, but we haven't seen a collapse into $50 or $40 range in having it sustained at that level. Part of that is due to Chinese buying. They were buying quite a bit to refill their inventories. Now, those purchases might start to slow as the year goes on and as we go into 2026, so that demand isn't really there anymore. So you could see this tapering as, hey, they're going to see how the market digests this last bit that they're adding through December, and then after that, see where the market stands, because there is a view widely that there is an oversupply coming. At the same time, you also have U.S. output, which has been quite strong. U.S. production has remained near record levels despite Brent, or rather WTI, being at the low $60 range.
Yeah. And it's interesting, you know, last week, the Aramco CEO, Amin Nasser, was speaking at FII, and he said that he's still seeing strong signals come through from Asia. You referenced the fact that China had been building their strategic stockpiles. What are you watching out for in the coming months, Stephen, to determine whether that demand has started to falter?
Yeah, I mean, clearly you have to look at the run rates at refineries, what the teapots are purchasing and what their quotas are. You also have to look at industrial output from China to see how the Chinese economy as a whole is kind of going. Because when you look at the strong Chinese demand, yes, they were filling their strategic reserves, but that isn't because of the enormous demand coming from China's sector. It's not because there's a huge amount of gasoline being guzzled or diesel being produced for trucking. The EV sales in China have been very strong. And so on a long-term basis, Chinese demand for gasoline products will not continue to grow as it has in the past. Likewise, for heavy trucks, they've been shifting to some degree to LNG, liquefied natural gas, as well as electrification in that sector as well. So I think you need to watch just the downstream demand from China. You need to look at industrial demand overall. But that growth hasn't been where traders were expecting maybe a year or two ago when China was coming back from the post-COVID era. Continuously, China's industrial growth and economic growth has sort of was not living up to the hype that a lot of the traders had been expecting, and it hasn't really pushed up oil demand significantly. Now that can change, but when you're looking at the market, it's not so much a demand situation; it's also the supply. And as I signaled, the U.S. supply has remained strong. OPEC Plus continues adding barrels to the market, and there are others as well that are adding.
Yep. Well, keeping a close eye on where the oil markets are trading today, slightly higher, not a huge amount, and of course, perhaps cognizant of that oversupply that's to come in the coming months, as you just highlighted. Stephen Statinsky, thank you so much. Now, President Donald Trump has threatened possible U.S. military action against Islamist militants in Nigeria. That's if the West African nation's government does not stop the killing of Christians. For more, our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Jen, I mean, just walk us through how all of this came about and President Trump's post about Nigeria over the weekend.
Right, Jumana, this follows a few weeks where we've been seeing a number of U.S. officials, including Senator Ted Cruz, joining a chorus of U.S. Christians on the political right, really seeming to want to take a closer look into Nigeria. And then, of course, as you mentioned there, over the weekend, we saw an escalation from President Trump on his Truth Social platform, saying that he wanted to designate Nigeria a country of particular concern potentially placing the country on a watch list of states thought to systemically violate religious freedoms, then threatening potential action, military action against the biggest country on the continent. And then Sunday really taking even more of a turn because the president apparently got a question from a reporter and reiterated that same rhetoric, asking whether or not it would be airstrikes or ground troops. And he said it could be, I envisage a lot of things. And as you can see there, that is part of what he was saying over the weekend. Now, as you can imagine, this has caused quite a bit of concern, swift responses, including from that of President Bola Tinubu, as you were just mentioning there. He actually put quite a lengthy post on X over the weekend that reads in part, "The characterization of Nigeria as religiously intolerant does not reflect our national reality, nor does it take into consideration the consistent and sincere efforts of the government to safeguard freedom of religion and beliefs for all Nigerians." Now, I think it's important we give a bit of context here because, yes, the country has been dealing with quite a bit of violence and Islamic insurgency in the north from Boko Haram and also from another group known as the Islamic State West Africa Province, dating back to at least 2009. But this is a country of more than 230 million people. It's split by most estimates between Muslims and Christians. And many of the officials that we've spoken to and that have commented on this have said there is not any evidence of particular targeting based on religion. And in fact, the targeting is of all Nigerians, in fact. And what we have seen from President Bola Tinubu over the past few years since he's been in office, this has been something that he has been pressured to address. And he's actually tried to take some reforms to address it. But clearly, this could have some detrimental effects if, in fact, President Trump does follow through on some of these comments.
Well, that's the thing, Jen. First of all, how seriously is the Nigerian government taking these threats? And just as a follow-on to that, what is the risk here for Nigeria if he does follow through?
Right. Well, the fact that we did see such a swift response from President Tinubu sort of indicates to us that they're clearly taking it quite swiftly. And if you take a look at some of the officials that have also commented, many people are a bit puzzled just given this sort of direct targeting of the country. We should also mention that Nigeria has been one of those countries that has faced tariffs, 15% tariffs. That looks like about $400 million in trade for the country. Aid to Nigeria back when former President Biden was in office in 2023 was about $1 billion. So far, what we know is it's about $250 million in 2025. So not only could this potentially have an impact on investor confidence, especially as we've seen Nigeria bounce back from crude. We're now seeing increased crude output. We're seeing some stabilization in the economy. Potentially, this could have widespread effects and come at a time when President Tinubu is at least been pressured and trying to follow through on what a lot of investors had been concerned about the continent prior to this point in time.
Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Just a stunning development, a turn of events over the weekend. Coming up, we speak to Toby Rice, the president and CEO of EQT, on the evolving role of natural gas as a critical enabler of the AI-driven energy demand surge. Stay with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Abu Dhabi today for the ADIPEC conference. Now, artificial intelligence is radically and rapidly transforming the energy sector. Advances are being seen across exploration and production, as well as more efficient drilling and managing of renewable energy sources. SandboxAQ has released a quantitative AI model focused on discovering new catalysts for energy, chemical, agricultural, and other applications. To dig deeper into this, Jack Hidary, CEO of SandboxAQ, joins me right now. Well, I can't think of a better person who's uniquely placed to talk about the intersection between artificial intelligence and energy. That's a big theme here at ADIPEC this week.
And Simandou, great to see you.
Yeah, good to see you too. So just talk to us about the extent and the scale of the opportunity that you see in this space right now.
Well, it's really fascinating. 99% of the AI that our viewers here are familiar with, ChatGPT, Google Gemini, wonderful applications of AI, but that's AI for the digital world. Now we're talking here at ADIPEC about AI for the physical world. And that's the AI that's really going to impact the energy industry and all of the consumers of energy around the world.
So what does that mean exactly?
So let's talk about, for example, when we take oil out of the ground, and many of the companies that do that are right here at ADIPEC, what happens to that? How do we turn it into useful products, both fuels and products that we can use? 80% of all the products that we use in our world come from the hydrocarbon cycle, come from these kind of companies. And so we need something called a catalyst. A catalyst is a chemical that helps us turn raw product into finished product. And to make catalysts, it's really difficult. On average, it takes about 5, 10, sometimes 15 years to make a new catalyst. Those are essential ingredients to making all the goods in our world. The cars, the chairs, the pens, everything you use in our world comes from using a catalyst. And now with our AI that we just announced last week with NVIDIA, this is an AI that is the best AI, the best model in the world to make a new catalyst for the energy industry.
So what is it specifically that you're doing differently from your competition in this space?
Great question. So instead of training on words, so large language models are trained on all the words of the internet, and that's great if you want to write an essay, if you want to summarize a document, marketing, customer service, great applications for large language models. We're one of the leaders in the world of large quantitative models, meaning that we don't train on words, we train on numbers, equations, and molecules. And this is a very different training set, and therefore a very different model. And what we've shown now with NVIDIA's help, one of our investors, is that we can now produce catalysts at much faster speeds and also speed up other areas of the energy industry. An example is when you look at the fluid dynamics, the flow of fluid inside of a reactor as it's going through the refinery, we have sped up that process as well. So AI for the physical world is now going to be the next revolution of AI.
Yeah, and what sort of productivity or efficiency gains are we targeting here, right? Because one of the criticisms of AI is there's been so much spending on AI applications, but perhaps many companies are still not getting the return on investment.
That's absolutely true. An MIT study just came out that 90% exactly of the, and that's because, again, large language models are really good for some things, but not for all things. I'll give you another example. We talked about the energy industry here at ADIPEC, but also let's talk about the banking industry. Banks, it turns out, deal with numbers and equations. And large language models can be helpful in a bank, for example, to summarize some documents from the SEC or things like that. But the majority of what a bank does is numbers. And we cannot have any kind of hallucinations when it comes to the numbers in your account. Your account matters to a bank. It should anyway. And so we have to make sure that it's exact and precise. That's the domain of large quantitative models. Models based on numbers, trained on equations of quant finance in that case, or in the case of energy, trained on the physical laws to make new chemicals for the world. So these are very different models. We don't have any hallucinations because we use pristine scientific data instead of the words of the internet. That's a big fundamental change, and that speaks to the issue that the MIT study
and ostensibly, you're also dealing with troves of data that go back decades, right? You're talking about, Aramco, ADNOC. These companies are sitting on decades and decades of data specific to the energy industry, specific to the type of data that's going to inform your models better.
That's correct. With that kind of data, you do not want to feed that into a language model. That is very different kind of data. And even when you talk about biopharma is in the same kind of ballgame where if you look at Sanofi, look at Roche, they want to develop new drugs. That's not really the large language model to do that. That's, again, an AI for chemistry and biology.
How do you see quantum computing coming into this in coming years?
Well, quantum now is really starting to get in people's minds, and that's very exciting because quantum computers will add to the mix. A quantum computer fundamentally is different than the computers we have. It's not just faster, it's a different kind of computer altogether. The good news is there's about a dozen companies out there right now, both large companies like Google, IBM, Amazon, Microsoft, as well as a lot of startups such as PsiQuantum and others, QEra is another one, that are now rising up. And I think in the next 5 years, we're going to see significant progress on the part of these quantum computers. SandboxAQ, we write the software that runs on top of those quantum computers. And so it's an exciting coming together now, a convergence of the software algos and the hardware.
Yeah.
But we may also want to talk about the cyber aspect as well to all this.
Yeah, well, I mean, obviously there are cybersecurity concerns. How do you think about creating a system that is bolstered and immune to those types of shocks?
Jumana, this is a fundamental issue, particularly here when we talk at ADIPEC about the energy industry. Energy is a critical national infrastructure for every country in the world. We cannot exist without energy. And so we must protect, from a cyber security perspective, the energy, the power generation, the electric grid itself, the usage of all this, the management of all this has to be protected. We know that there are state actors and other hackers that have penetrated into the electric grids in the United States. We know that's happened for sure, and probably happened in other places as well. AI is both a great tool for hackers, but also the tool we need to defend against these hackers as well. So AI is really a dream tool for anyone wanting to go into a certain area. For example, for phishing, they can write a beautiful email, "Dear Jumana, please click on this wonderful link." And that's a great threat right now. And so energy companies and national companies as well need to really think about how do they defend themselves against this. And the best way to defend yourself against an AI attack is AI itself that can look at that attack, detect that attack, and stop it in its tracks. 4 or 5 years from now, we also have to worry about the quantum attack. That's also going to be something 4 or 5 years from now. But right now, we've got to worry about the AI attacks.
Jack, so interesting. Really good to chat to you. That was Jack Hidary, SandboxAQ CEO here at ADIPEC. Well, the long-delayed Simandou line in Guinea is set to go online. After decades of political turmoil, corruption scandals, and corporate battles, the $23 billion venture led by Chinese-backed firms and mining giant Rio Tinto is set to transform Guinea into a major force in global mineral exports. For more, we're now joined by William Close. William, talk us through what has actually changed in recent years.
So in recent years, what really changed was in late 2019, a Chinese Singaporean group was bought into the project called the Winning Consortium. And that really put a motor into the project. So since then, Rio Tinto and the Winning Consortium have agreed to work together. They're building separate mines, but they are co-developing, and that's really important, the 600 kilometers of railway and the port complex. So after almost 3 decades and an investment topping $20 billion, both of them are set to export their first cargoes of iron ore from Simandou to China before the end of the year. Now, it's a really important development for the steel industry because iron ore is used to make steel. And this, when it's all ramped up, will produce 120 million tons of iron ore a year. That's equivalent to about 5% of production in 2024. So that will be ramping up over the next 2.5 years.
Yeah, and how big a deal is the Simandou project?
It's really important for China because China's been trying to China's the biggest producer of steel, and it's been trying to get more influence over the iron ore price. So having this steady, large stream of high-grade, largely Chinese-owned iron ore will help in that endeavor. And it's really important for Guinea, potentially transformational. It's one of the poorest countries in the world. And this, according to one IMF estimate, could increase their GDP by more than 1/4 by 2030. Bloomberg's
William Close, thank you so much for the overview there. Well, coming up, we speak to Toby Rice, the president and CEO of EQT, on the evolving role of natural gas as a critical enabler of the AI-driven energy demand surge. That's coming up in just a few moments. And a quick look at equity markets before we head to the break. And today we are seeing things move towards the green. As you can see, green on the screen here. S&P futures up about 0.2%. Nasdaq up slightly more. European markets also looking like they're going to open up the week in positive territory. So we're here at the ADIPEC conference. Join us after the break. We're going to have more conversations about the intersection of energy and AI. This is Horizons Middle East and Africa, our top stories this morning. Oil rising after OPEC Plus announces a pause in output in the first quarter of 2026. That's after confirming a modest hike in December. President Donald Trump threatens military action in Nigeria over Islamist militant attacks on Christians. Nigeria's Bola Tinubu defends his government's efforts to protect religious freedom for all. And stocks and futures rally as strong tech earnings and easing U.S.-China trade tensions lift sentiment. It's just gone 9:30 a.m. across the Emirates. I'm Johannesburg in Abu Dhabi here at ADIPEC. Let's get you up to speed on these markets. And what we're seeing so far is active futures leaning towards the green at the start of the week. S&P up 0.2%, building on some of the gains that we saw last week. A détente between U.S. and China. Some stronger tech earnings coming through towards the end of the week, even though we did have a slightly more hawkish than expected Fed meeting on Wednesday. But today, S&P futures up 0.2%. The handover from Asia also pretty positive as well. We have the Asia Pacific ex-Japan up 0.8%. Japan is out for a holiday today. The Bloomberg DXY, the Bloomberg dollar, is trading sideways, though we are seeing some stabilization in the last couple of weeks. And then oil. All eyes on oil this morning. We are up 0.4%, pushing through up through $65, and a bit of a relief coming through for the oil markets after OPEC Plus announced that they were putting back an extra 137,000 barrels per day to the market in December, but then taking a pause for the first quarter of next year, waiting to see how supply demand, the picture shapes up in the first quarter of 2026. So on the back of that, we're seeing a slight uptick, a bit of support come through for the energy complex. Speaking of energy, we are here at ADIPEC, one of the world's largest energy conferences, and I thought it would be good just to showcase, actually, clean energy stocks have done pretty well this year. They've beaten the S&P. If you look at a basket of some of the key names compiled in that space. So we're talking about things like batteries, renewable energy, solar sources, wind. All of those are in that basket. And despite a lot of the headline bashing that has come through from the U.S. administration, there has been quite the outperformance there, namely because the market has been quick to account for the new energy demands coming through from artificial intelligence and where renewables will step in to that space. Hence why the outperformance, especially in the last couple of months. So really interesting. All right, former U.S. senior advisor to President Biden, Amos Hochstein, suggests that the U.S. needs a more pragmatic approach to energy. He says the U.S. is already energy dominant, but warns that stepping back would mean ceding ground to China.
They missed the boat because we are already energy dominant. We have been energy dominant. At the end of the Biden administration, as I said, record oil production, record gas production, but also record investments in renewables. So we need it all. If you want to be energy dominant, you can't say no offshore wind. You can't say no onshore wind. You can't restrict permitting for solar. I agree with the Trump administration, and I wish we did a better job at this, which was DOE reducing the burden of regulation and permitting timelines. But I don't agree that you can get to where they want to go for energy dominance without the renewables in addition to the fossil fuels.
Yeah, and you don't see the U.S. perhaps shifting focus, derailing the momentum and investment in renewables around the rest of the world. We've got COP going on this week, and many people saying that the fact that U.S. are only sending lower level delegates there is, a shot in the dark. It's actually really could derail this whole process of what COP is trying to achieve.
Energy dominance means that we are the best at everything across the board. if we walk away from the conversation on renewables and electric vehicles, then China wins.
That was Amos Hochstein, TWG Global Managing Partner and former Senior Advisor for the Biden administration. Well, artificial intelligence is radically transforming the energy sector, and ADNOC is taking another leap forward, signing a multi-year deal with Gecko Robotics to deploy advanced AI-powered robots across its gas facilities. The partnership aims to reduce downtime, improve safety, and accelerate the UAE's ambition to lead in AI and energy innovation. To unpack what this deal means, we're now joined by Jake Loosararian, CEO and co-founder of Gecko Robotics. Really nice to be speaking to you. First of all, talk to us about this deal that you've inked with ADNOC and what are the objectives?
Absolutely. Well, the deal we just struck with ADNOC Gas in particular is to deploy robotics and AI systems that Gecko makes to help to improve the efficiency as well as how safe the refinery and energy assets are for ADNOC Gas. And then there's also a wink and a nod to the deployment across ADNOC Group, and also, of course, an upskilling and training with ATA to help give the best technologies to those that are making the whole world go round.
Yeah. Can you give us any color on the size of the deal?
The deal size shows, I won't get into specifics of finances, but the ambition, of course, you can imagine is quite large by ADNOC as it desires, as Dr. Sultan says, to be the leaders in AI and robotics in the energy sector, and this deal matches that ambition.
Yeah. And how does it complement the work that ADNOC is doing with AIQ?
So we partner with AIQ on this deal to help to accelerate with assets, data sets, and also the process data sets of the of ADNOC Gas's facilities. And so AIQ's incredible stack of artificial intelligence agentically is able to help to ensure that ADNOC Gas is able to make decisions that help assets last longer and perform way better. And so it's a really amazing combination of artificial intelligence on the physical intelligence and robotics side mixed with what's AIQ doing already.
Yeah, and so if we go back to the technology that you're providing, you know, it's AI-powered robotics, it's sensor systems, and you know that will get access to critical infrastructure, often parts of infrastructure that are hazardous for humans to get access to.
That's right.
How do you see that advancing efficiency, operational efficiency for the companies that you're partnering up with?
Yeah, so Gecko Robotics builds these systems that are going out and understanding the health of these built structures. They're climbing on walls and pipes, they're walking around and gathering data sets all over these physical structures. What we're trying to do is diagnose the health of those built structures to be able to inform what kinds of decisions that need to be made both now and also predictively into the future.
Yeah, so it's more about, I would say, predictive maintenance as opposed to remedying on the spot.
That's exactly right. And then also with that data set, the health data helps you show how to make those assets last way longer and also perform way more efficiently. That data set never existed before, and without that data set, AI systems just are left subpar and also not effective. And so the algorithms are not very useful without the fuel that is the data sets from the robots.
Yeah, so I guess collecting of the data is quote unquote the easy part, but then turning it into actionable intelligence is where it becomes a little bit more challenging. Do you have the compute that's necessary to bring all of that together?
We do. The robots are able to do, yes, like compute on the edge is important, but actually the ability to take all the information, put it into Cantilever, the software system that we've developed, allows for our AI to be able to do compute with local servers here without having to do as much on the edge, which actually is very powerful as it relates to the ability to understand, diagnose the data set to make sure you're not making too many decisions at the edge where you might need to take a little bit more time to ensure that you're making the good decisions. And so the data set that we are collecting is so massive compared to what humans are able to do without the tools. It's actually helping to, in some cases, reduce by 20% the amount of dangerous work environment for the human, but also reduce the amount of time in turnaround. That's how you can get more energy from AI, is actually reduce the days of turnaround, which is exactly what we're doing with this deal.
So you've got the partnership with ADNOC. Any plans for partnership with Aramco as well?
Right now we're very focused on making a huge impact for ADNOC, and that's quite a large ambition in and of itself. But of course, the region is very aggressive as it relates to wanting to be first and winning the race as it relates to the data that feeds the AI.
I was going to ask you about that. You know, relative to other jurisdictions, regions around the world, how do you see the Middle East and also these Middle East energy champions embracing artificial intelligence versus the rest of the world?
We've been here in the UAE, have an office for the past 18 to 20 months. What that means is that we're not just here for a big deal and then I'm off somewhere else. We invest very much into the UAE and also the workforce. And so the partnership that we signed in the agreement with ATA is about actually helping to upskill workforce, to train them on the robotics and software, to ensure that labor is able to keep up with and reduce the barrier to entry to make big impacts with these new tools. We want to make superhumans out of the Emiratis that are so ambitious to be leading the world in energy. And so that's what we're oriented towards doing. But as you can imagine, the workforce that we're developing is one that's very envious around the world. And so we're investing a lot here. Most of our work is in the United States, but this is our big global HQ is here in the UAE.
Just a final question for you. How scalable is your business?
The business is, because robots are able to do the incredible amounts of efficient work, when you give humans these kinds of tools, it actually helps to reduce the amount of training humans need to be able to be super efficient. In some cases, something you would take 20 to 30 years to be efficient in, robots can help you in a few months be able to be way more efficient in collecting data sets. And then the tools that AI provides reduces as well how skilled you must be, because we're collating all the information from the smartest people around the world. No matter where you are, the cantilever tool allows for you to get access to those experts. And that's all it's all about, is turning regular people into PhD level engineer and chemical engineers.
Yeah, so. Well, it's a whole new world out there. Jake, thank you so much. Really good to chat to you.
Thank you.
Jake Loosararian, CEO and co-founder of Gecko Robotics. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And stay with us, plenty more from the ADIPEC conference here in Abu Dhabi coming up on Horizons Middle East and Africa. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johannesburg in Abu Dhabi at ADIPEC today. The CEO of EQT says the U.S. has fallen behind China in building the energy supply needed to power artificial intelligence and data centers. The head of the natural gas fracking company also says he's optimistic President Donald Trump's administration will stimulate exports of LNG. Toby Rice, EQT President and CEO, joins me now. Well, you didn't make those comments to me, so I guess I'm going to have to revisit some of them. But look, let's just start with the macro and the fact that nat gas has come off quite a volatile couple of years now. There has been an element of market tightness. How do you see things short term before we talk about some of the medium term concerns?
I think you nailed it. Short term natural gas markets are going to be defined by volatility. What's happened in the United States over the last 10 years with an infrastructure cancellation movement, we've seen demand grow 50%, but the infrastructure to support that demand, the pipelines, have only grown 25%. And most importantly, the storage infrastructure has only grown 10%. What that means is we're going to have markets that are disconnected, where people in Boston, in the eastern part of our country, are going to be paying the highest gas prices in the world. And they're right next to the world's largest gas field, the Marcellus, where EQT operates. And then from a storage perspective, it's just no longer going to be an effective buffer on prices. So we are going to see natural gas prices be very volatile, and we've positioned EQT to thrive in that environment by having a low-cost structure.
How long do you expect those bottlenecks to persist for?
It will exist until we get our act together and get infrastructure built. We are seeing market signals to get more infrastructure built, like the fact that Boston is paying highest gas prices in the world, next to the largest gas field in the world. But it's going to take infrastructure, and that is going to take permit reform. It needs to be the #1 priority in our country.
Is the Trump administration listening?
Absolutely. I think the Trump administration understands that energy needs to be affordable and reliable, and in order to make that happen, we need infrastructure, and to get infrastructure, we need to get things built. And that's going to require permit reform.
Okay, so there's one thing about the domestic market, but then more broadly speaking, I'm seeing more and more reports. The IEA put out a report last week suggesting that the LNG market is going to tip into oversupply in the coming years. How do you see that panning out?
Yeah, we don't disagree. Given the build-out that's coming in the United States, you know, we're currently exporting over 19 BCF a day. We are the world's largest LNG exporter. You've got some projects from Qatar that are going to be coming in that 27, 28 time frame. So there will be an oversupply. EQT, we are entering the LNG market, but we have timed our entry to start beginning in 2030. We'll have over 6 million tons of LNG that will be shipping around the world. Because you look out 2030, we see LNG exports or LNG market growing to over 100 BCF a day. That would be doubling by 2040 from where we are today. So this is, you know, everything that people are talking about right now. They're talking about power, they're talking about AI. Guess what? They're talking about natural gas. And when we step back and realize some of the other big issues that are struggling with the world that Bill Gates has put a bullseye on, we need to focus on making people more prosperous. Guess what? The fastest way to do that, get people more access to energy, and natural gas being one of the lowest cost forms of energy is going to fit that bill. The market potential for natural gas is tremendous, and LNG is going to be an incredible vehicle to serve that demand.
Yeah, okay, so we'll get there. Let me just ask you, assuming the supply glut does happen in the next couple of years, what does that do to domestic prices then in the U.S.?
So in the United States, we are tied to the international prices. So it does matter what happens with international pricing.
Yeah.
So you could see a situation where softness in the international markets backs up into the U.S., and that means LNG capacity in the U.S. will turn down a little bit, and that will push some gas. The loss of gas demand could lead to some lowering prices in the U.S. That said, keep in mind, one thing we've seen over the past couple of years is that demand for natural gas continues to grow in the U.S. We are seeing a 20% increase in natural gas demand, both to meet the power demand needs and this growing LNG export. So it's not the only catalyst for demand, but it is a significant one.
And how much of a driver of future demand is the demand that's coming through from the hyperscalers and from the artificial intelligence power needs?
So when we look at power demand, it's going to be growing in the U.S. We see that going anywhere from 10 to 18 BCF a day, so a 10 to 20% increase in natural gas demand to meet this power. Only 40% of that is for the AI data center build out. It's really important for people to understand this is the power demand build out is not just about AI. It's also about lowering energy bills, creating more reliability on the grid system. So natural gas has been played a tremendous role in power generation. We've increased the amount of natural gas for power generation over the last 10 years by over 14 BCF a day. Yeah. So we talk about what's in front of us, 10 to 18 BCF a day. This is something that the natural gas supply chain can handle, but we need the ability to meet the market signals. We need the ability to build the infrastructure to get this low-cost energy to the consumers.
Yeah, important distinction there. You know, one feature, I guess, of the last couple of months, given we spent so much time talking about tariffs and trade deals, is one thing that President Trump is quite intentionally doing is every time he signs a trade deal, there's an energy component to it as well. Do you believe that, you know, some of the trade deals that are being inked with these countries from Asia pledging to buy more U.S. energy, that it's going to offer a significant tailwind to your own business? Do you see that as an opportunity to gain market share?
Absolutely. We think that American energy, specifically LNG exports, can be the biggest tool to help balance some of these trade deficits. So when you look at what the U.S. has to offer the world and what the world needs, LNG is a perfect fit. So we're incredibly excited about the trade deals that are going to be coming out, and we're excited to see what happens with China.
Yeah, so good to chat to you. Thank you so much. That was Toby Rice, EQT President and CEO. Well, coming up, Saudi Arabia's $1 trillion wealth fund is looking to sharpen its focus on portfolio companies in the coming years. We are live in Riyadh next with the details. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johannesburg in Abu Dhabi today. Saudi Arabia's sovereign wealth fund plans to sharpen its focus on portfolio companies like artificial intelligence firm Humane as part of its investment strategy for 2026 and beyond. The public investment fund hopes to attract more investors and transform some of its subsidiary firms from national champions into global ones. Joining me now is Christine Burke, Bloomberg Saudi Arabia Bureau Chief. So Christine, very interesting to hear about this potential PIF strategy revamp. What do we understand?
Well, good morning, Jumana. First, let me give you some context here. So the PIF has had a number of investment strategies since the Vision 2030 agenda was launched in 2016. We are in the current strategy of 2021 to the end of 2025. So what we are waiting on is for the PIF to tell us what their priorities are going to be between 2026 and 2030. Our sources are saying that the PIF plans to make those plans public in the first quarter of 2026, probably sometime around January or early February, and that those plans are going to include taking the 100 or so portfolio companies that the PIF has created in the last 5 years and turning them from national champions into international champions. Essentially, what the PIF wants to do is see these companies kind of exporting their services and their products to the world after the last 5 years of focusing on driving the Vision 2030 strategy at home. On top of that, it's hoping that these companies will draw in private investment, investment from foreign investors, and that also these companies will become more financially independent, meaning we may see them issue bonds, potentially tap public markets. And the companies that are coming up quite frequently are AI firm Humane, the new airline Riyadh Air, and also companies including Avilease and Elat, which is also a company focused on smart manufacturing.
Yeah. Christine, I've also been keeping a close eye on the Tadawul performance, down about 1.8% over the last couple of trading sessions. This is news of, those foreign ownership rules perhaps actually being pushed back, the loosening being pushed back to next year. What do we understand from the latest guidance out of Tadawul?
Yeah, so we are seeing some weakness in the Saudi stock market at the moment, and I think this is down to investors trying to assess what the path forward is for some of these critical market reforms out of Saudi Arabia. So we spoke to the CMA back in September of this year, and they told us that they were hoping to remove restrictions that currently limit foreign investors to owning 49% of Saudi equities. They hoped to make changes to these rules before the end of the year. Now, fast forward, and what we heard last week from the CMA was a little bit of clarification. The CMA is now saying that actually it's going to be revisiting that rule in 2026, and it's not actually sure whether it will entirely eliminate the rule, meaning that investors from abroad could then own outright 100% stake in Saudi companies, or whether it will move to gradually lift this limits. So I think it's just investors here kind of taking a little bit of a pause and trying to assess the path forward. The good news is that the CMA has been very clear that it does intend to lift these foreign ownership limits because it wants a more open and free market that will allow foreign investors to come and have a bit more skin in the game in the Saudi market.
Christine Burke, Bloomberg Saudi Arabia Bureau Chief, thank you so much. And coming off a very busy week at FII last week as well. Good to have you with us on the show. Now for a look at some of the other stories we're following today. Saudi Arabia's SABIC has posted a third quarter net income of 440 million riyals, which trailed the consensus forecast of 729 million. The kingdom's biggest chemical company reported revenue and average selling prices dipping, while sales volumes are mostly flat but are expected to increase slightly in the current quarter. And Israel has threatened to step up military strikes against Hezbollah in Lebanon as a senior U.S. envoy warned Beirut time was running out to disarm the Iranian-backed faction. U.S. diplomat Tom Barak has also advised Lebanon to speak directly to Israel and potentially cultivate bilateral relations, saying Israel has become a dominant ally in the Middle East. And a quick look at active futures as we round up the show. Things are pointing to green, keeping a close eye on the price action in oil today. The oil markets meaning slightly higher after that OPEC Plus decision yesterday to put back barrels to the market but hold off in the first quarter of next year. That is it for our show, Horizons Middle East and Africa. I'm Joanna Bersecci in Abu Dhabi at ADIPEC.